Welcome back, everyone. Now, if you're a focused learner trying to cut through all the noise and get straight to the numbers that actually matter, well, you're in exactly the right place. Today, we're decoding the post-market report for July 24th, 2026. We've got fresh data, hot off the press, and we're going to break it all down so you are perfectly positioned and fully prepared for today's trading session. So grab your notepad, get comfortable, and let's get into it. So, what really drove the market today? It's kind of the million-dollar question, isn't it? Every single day, we're bombarded with this mountain of financial jargon, flashing tickers, and dense analytical reports. Honestly, sometimes it feels like they're written in a totally different language. Well, in this explainer, we are going to act as your translators. We're going to demystify that dense data from the daily report, completely strip away the fluff, and uncover the actual mechanics that pushed the market up or pulled it down. Okay, let's dive into our roadmap for the day. We'll be looking at 1. Support and resistance. 2. Open interest for PE and CE. 3. FII and DII activities. 4. Global index sentiments. And finally, number 5, key news and global activities. All right, starting off with section 1, support and resistance, otherwise known as the market's floor and ceiling. Now, we all know support and resistance basically form the market's room. But listen, in a post-market report, these aren't just arbitrary lines drawn on a chart. No. They're mathematical battlefields where buyers and sellers literally fought to a standstill today. Establishing exactly where these structural boundaries held firm or, where they snapped under pressure gives you the definitive strike zones for tomorrow's trades. It maps out the precise areas where momentum is either going to accelerate or just hit a brick wall. Moving right along to section 2, open interest across PE and CE. It's time to decode the options data. When we look at put European or PE, we aren't just tracking bearish bets here. A massive clustering of PE open interest, that is a flashing siren of market apprehension. It tells us exactly where the smart money is furiously building safety nets to hedge against a potential drop. By isolating these heaviest pockets of put writing in the report, we can see exactly what downside targets the big players are actively defending right now. And directly contrasting that, heavy concentrations in call Europeans or CE pinpoint overwhelming upward expectations. Analyzing this dualistic data, basically weighing the active fear in the PEs against the sheer greed in the CEs, completely uncovers the market's unfiltered bias for the next session. This is exactly where you see if the market makers are aggressively positioning for a breakout or if they're just bracing for a rejection. So, the crucial point here is this. Highest open interest equals market expectations. This isn't some abstract theory. It's the collective psychology of the market translated into hard, cold numbers. By tracking these specific open interest concentrations from the July 24th report, you aren't just reacting to what the market did today. You're actually anticipating what the market believes it will do tomorrow. And incorporating this foresight into your strategy, well, that's how you stay one step ahead of the herd. Which brings us to section 3. FII and DII activities. Let's talk about the whales moving the money. This is the heavyweight matchup, foreign institutional investors versus domestic institutional investors. Literally every single trading day is a colossal tug of war between foreign liquidity rushing across borders and domestic financial giants deploying localized capital to either hold the line or drive a rally. We aren't just looking at who bought or sold, we're measuring the sheer force of institutional momentum that's actually moving the market. Which naturally leads us to a critical question. Who actually won the tug of war today? I want you to really consider this. If FIIs are selling off massively, but the market didn't crash, well, it means the DIIs stepped up and absorbed that selling pressure. Or conversely, if foreign money is flooding in alongside domestic buying, it sets an incredibly bullish tone. This delicate balance of foreign and domestic institutional flow ultimately sets the tempo for the entire trading day. It forms the absolute backbone of our post-market analysis. Now, let's zoom out for section 4, global index sentiments. We're looking at the big picture here. Global index sentiments remind us that, say, a tax sell-off in New York or a sudden policy shift in Tokyo creates immediate ripples, and those ripples crash onto our shores right by the opening bell. The post-market report synthesizes these international moods, the overarching trends across Wall Street, European indices, and Asian markets to accurately forecast our own macroeconomic weather. We absolutely have to know if we're sailing into a global tailwind or bracing for a macro headwind. Finally, section 5, key news and global activities, the catalysts for action. This is where the real world collides head-on with the data world. We have key news like sudden earnings beats or major regulatory changes directly influencing the daily narrative, while broader global activities shift macro capital flows. The true power of a post-market report lies in synthesizing these external events with the local technical data. Because honestly, it's not enough to just know that a technical support level broke. You absolutely have to know what real-world catalyst broke it to understand if the move is a fake out or a genuine trend. When you put it all together, the equation looks exactly like this. Local data plus global sentiment equals tomorrow's roadmap. That is the core philosophy of this entire explainer. You see, a post-market report is not just some history lesson about what happened at 3 p.m. today. When you combine the support and resistance zones, the massive options bets, the institutional flow, and the global news catalysts, it transforms into a highly predictive blueprint for the future. So, as we wrap up our breakdown of the July 24th, 2026 report, I want to leave you with this final provocative thought. When the opening bell rings, will you let the sweeping winds of global sentiment dictate your next trade, or will the hard, localized data of support and open interest be your absolute guide? The most successful traders know exactly how to dynamically balance both. You've got the structural breakdown, you have the data, and now you have the roadmap. Take this knowledge, apply it to your strategy, and go conquer today's market. Thanks for joining me on this explainer, and happy trading.